Apple stock is down about 2% today. This is the most notable name in the S&P as well as the Nasdaq, controlling 7% of the S&P 500, 11% of the Nasdaq. When Apple starts to fall, you need to pay attention. And we're going to get into exactly why Apple is down about 2% today. We're going to get into the data that came out as well at about 11 o'clock today. You had consumer inflation expectations. Inflation expectations tend to lead inflation, and heading into May 4th, any and all economic data or inflation data is going to be vitally important for this market. And as you guys do know, May 4th is going to be the next Fed meeting. On top of that, we're going to talk about the data for the rest of this week because you have so much big economic data. This is probably the most important week of 2023. So we got a lot to talk about in a very short amount of time. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section if you have not already. I don't know what you're doing. It is free 99. So Apple down about 2% today, 1.95%. It's been a long time since you've seen Apple down this much. Apple has really been an outperformer as of recently in 2023. Just look at the chart. I mean, you've rallied exponentially. Like the rally just didn't seem to stop. Even now, after today's 2% decline, you're still up 30% on Apple for Q1. Well, which would have been Q1. You were up more than that. You were up about 34% from the lows to the high in Q1. So you're up massively. And you're getting some news today that really says, yeah, maybe Apple should not be so richly valued because after all, technology is in a bubble. Let's be honest there. Technology is in a bubble. The only way that it is not is if earnings can grow and margins can grow. And I don't think in this environment that is going to happen at all. Now, Apple's Mac shipments fall more than 40%, worse than major rivals. And it says the Mac shipments fell 40.5% in the first quarter of 2023 compared with the same time for the prior year, market intelligence provider IDC said. Apple's worldwide PC market share dropped between the first quarter of 2022 and the first quarter of 2023 from 8.6% to 7.2%. So you're seeing the overall market share of Apple going down by quite a bit year over year. And you're seeing 40% of a drop in Mac shipments. That's bad. Nobody expected that. You expected 10, 15, some analysts expected up to a 20% decline in Mac sales and Mac shipments, but not a 40% decline. That is very bad because if Macs are slowing down, then why would iPhones not be slowing down? If iPhones were to slow down 40%, you would be in a real shit show, even if they were to slow down 15 or 20%. Right now, we're expecting about a 3% decline year over year in iPhone numbers. That's a problem. And this is going to lead to potentially a lot more fear in Apple as the days do progress until we get Apple earnings later in the month. So that is the big thing coming out with Apple here today. Now let's take a look at the economic data, because the economic data was also not pretty. So you got wholesale inventories at 10 o'clock in the morning today, came in at positive 0.1%. Last month's reading was negative 0.6%. You were expecting a reading of 0.2%. So 100% worse than expectations. Not a good thing. Consumer inflation expectations for March. Get this. You were expecting, and this is a one-year inflation expectation, 4%. It came in at 4.7%. Basically, everything pushed this higher besides healthcare. Healthcare seemed to be, and food, seemed to be the only things that people are expecting to get cheaper in the next year. This is a very dramatic jump, and I don't think this sends a good message heading into CPI on Wednesday or subsequent CPI reports over the next couple of months, because inflation expectations lead to actual inflation. When business owners are trying to evaluate how much they should raise prices every year or every couple years, however often they raise prices, seeing inflation expectations going higher and people expecting more inflation leads to more inflation. Now, you are going to get Fed Williams that will speak at 4:15 p.m. right after the bell does ring today on Tuesday. So tomorrow, you're not going to get too much. You're going to get a 3-year bond auction at 1 p.m. as well as Fed Harker that speaks at 4 p.m. Tuesday is the most docile day of this week because then on Wednesday, you're going to have the inflation rate month over month. You're expecting a forecast of 0.3%. Last month's reading was 0.4%. That is headline inflation month over month. Core inflation year over year. You are expecting 5.5%. Last month's reading was also 5.5%. The inflation rate year over year. You are expecting 5.3%. Last month's reading was 6%. So a decent headline drop to inflation. Now, core inflation rate month over month. You are expecting an increase of 0.4%. Last month's reading was an increase of 0.5%. So you're expecting core inflation month over month to go higher. And that is ultimately the one thing that we do not want to see happen, because that is very bad for Fed policy and what the Fed is ultimately going to do. So that will be big coming on Wednesday. And on top of that, you're going to get the FOMC minutes. Now, the minutes, if you guys are unfamiliar, is basically a transcript of the last Fed meeting. It will tell you, long story short, why the Fed raised rates at what they did, or really why the Fed did what they did. And considering the banking crisis was happening that same time period, it will be very important, and probably more important this time around than it was last time around. And it typically does give you a market reaction, but considering the banking crisis, it's probably going to be a bigger market reaction this time. Now, Thursday, you are going to get PPI month over month for the month of March. You are expecting a 0.1% increase. Last month's reading was negative 0.1%. PPI, if you don't know, think of producer price inflation. It's technically producer price index, but it's the producer side of inflation. So you're expecting inflation to go higher here, but not too much. Excuse me. Last month's reading, you were actually in deflation because it was negative. You're also going to get core PPI as well as PPI year over year as well. Core PPI year over year, you're expecting 3.4%, down from 4.4% at the last month's reading. And PPI year over year, you're expecting 3%, down from 4.6%. Also at the last month reading. Initial jobless claims will also come out at 8:30 in the morning, expecting 234,000. I don't think that's going to be a big deal until you really start to get like 300,000 or 350,000, really start to break market expectations. That's where initial jobless claims could be a better leading indicator of pain coming in the economy. So there you have that. Now on Friday, you're going to get retail sales month over month for the month of March. This will be big because it will directly tell you how the economy is doing. That's coming out 8:30 in the morning. You are expecting a contraction, a negative reading of 0.9%. Last month's reading was negative 0.4%. So you're expecting retail sales to really start to slump here. And the other data points as well, like export prices, retail sales, ex gas / autos, import prices, retail sales year over year, export prices, manufacturing, production, capacity utilization. All of these other data points will be important in the narrative of inflation and Fed policy. Now, Michigan consumer sentiment will come out as well Friday at 10 o'clock in the morning. You are expecting a reading of 62.2, a little bit better than last month's reading at 62. Now, the biggest thing here will be the Michigan 5-year inflation expectations and the 1-year inflation expectations as well. That will be released at the same time, but there's separate data points in this Michigan Consumer Sentiment Survey. And like I said, inflation expectations are important, and the markets do react to this Michigan Consumer Sentiment Survey. So that is what you have in store for this week. Now, you also have a lot of bank earnings that will be coming out on Friday as well. JP Morgan, United Health Group, Citi, Wells Fargo, PNC, and BlackRock. Obviously, I shouldn't have to reiterate here, but considering the banking crisis, we want to know what banks have to say, number one, about the consumer, about how they are lending out money. But we want to see if these banks are still doing okay, if they're still, decently profitable, or if things just deteriorated over the last couple of weeks. That will be big and that will be very important. So, this is your lineup for this week. Now, you also had some news coming out on Tesla as well that we will cover here in the next video, that Tesla is switching to iron batteries that slightly give you a less range, but are going to be a lot cheaper, hopefully help out margins a lot more within Tesla. You're also getting news that China's EV delivery numbers overall for the country of China were not good and really decelerated on a month-over-month basis to almost negative territory. So, guys, that is going to do it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.